Hey, all, welcome to ShareTreck. Good morning. This is Raj here, and welcome to the morning show. It's the 28th of July, 2022. Today, the GDP numbers are going to be out, so it's a very tricky situation for me to make this video because I always aim to release it by just about 9:30 in the morning. I might be slightly late today. That said, let's get started. Well, let's start off by first looking at the fear and greed index. We haven't seen this index for a long time. I was very curious to see what it looks like. Here you can see that we are still at a reading of 38 and in the upper third of fear. Once the VIX comes down to 20, we should be in the neutral segment. Till then, I think we are going to be in the fear bracket. We still have a 33% area to cover. I think all of that will become much more clearer in the next couple of weeks as we start seeing indications of inflation going down. So will we move closer towards the neutral section of this graph. That said, today we may potentially see some selling as normal reaction to the rapid gain yesterday. Now, whenever the market goes up all of a sudden, it has to give somewhere because there are many market participants who are going to think that, okay, let's take some gain before this falls. It can't keep on going up at this rapid rate. Especially I'm looking at Google and Microsoft, which gained very, very significantly yesterday. They're likely to give a little bit of their gains. And with that said, I always like to look at the heat map after a great bullish day because the green color is very soothing. Again, we have not seen the heat map in a while. But if you look at it here, it looks beautiful in green, while real estate and consumer defensive had a mixed day yesterday. Looking at the groupings, which we can see here, you'll see that utility is at the bottom of the daily chart, which is the very first segment that you see on the top, whereas communication was the biggest loser along with cyclicals in the weekly charts. In comparison, consumer cyclicals have been improving along with the technology, while real estate and financials have been declining. That's the trend I see when I compare the weekly to the daily. And on other news out there, we have Comcast, which reported earlier today and showed no subscriber growth for the first time in its history. Peacock subscribers also remained flat at 13 million after adding 4 million just the last quarter. So this does not sound good for streaming platforms going forward. However, they beat both on revenue and EPS. So that's the important thing that we can see here. I suspect that this is going to have an impact for streaming platforms in Q3. We'll have to watch this space. And here is one headline that makes me rethink the wisdom of our civilization, like we are at the head of the food chain out here. And I want you guys to please comment on this topic and let me know whether I'm being very naive or altruistic or am I being realistic? I just really need to understand what you guys think about this. The headline here reads, Shell Total continue buyback bonanza after record profits. And I personally feel that this is so callous in the backdrop of fuel-driven inflation. This buyback money should well be passed on to the customers as reduced fuel prices or put towards restoration of the climate damage that has been caused by the industry. Capitalism needs to get a bit of healthy dose of social responsibility because these companies cannot pretend to have nothing to do with the economic context in which they exist and thrive. Yeah, I really want you guys to tell me what you think about this. I am a capitalist. I do believe that we should have shares and we should have profits that should drive the motivation for the companies. But there has to be some amount of balancing, especially when we are at the edge of the climate change crisis and when we are at such high inflation levels that it is threatening economies. And there are a lot of people who won't be able to buy food because of the high level of inflation. At this time, this buyback is really, really bad optics. It just sounds like Marie Antoinette saying they can have a cake if they can't afford bread. So it seems something like that to me. I would be very curious to see what you guys have to say about this. But there is good news also. The headline from CNBC that I'm showing you here says that the cost of food, some food items went down. These include cooking oil, coffee, and avocado. The article does acknowledge that supply chain problems still linger. Recently, if you recollect, I mentioned that shipping costs are down but there is likely to be some pressure on shipping costs going forward, at least for tankers. As Europe cuts down on buying Russian oil, Russians will have to search for customers who will definitely be in faraway places like Asia, and they will need more tankers to supply the crude across the seas. Meanwhile, Europe will be buying from Middle East and US. So US and Middle East will have to scramble for freighters to supply oil to Europe. And this is going to put a lot of pressure for tankers, and therefore the tanker price index is likely to go up. I don't know if this will spill over to other freighters. I don't know how easy it is to convert a particular freighter into a tanker, but it will definitely have a upward push on the inflation, because oil prices feed on to everywhere, and if the freighter cost goes up, then the oil prices will go up, and it will feed into the whole economy. That's what I think. So demand for tankers to supply oil from US and Middle East to Europe, and demand for tankers to supply oil from Russia to Asia is going to lead this charge in inflating oil prices and shipping prices going forward. I think it's around 8:11 a.m. I would stop my recording right now. The GDP numbers should be out in another 19 minutes. So meanwhile, I'll try to edit this video and put as many things together so that I can reduce my time before uploading this video. I'll come back to you as soon as the GDP numbers are out. So hey all, the GDP numbers are out, and I have it here on the screen from the BEA. So Q2 2022 advanced reading is minus 0.9%. So I would think that we are in recession. That's what it says according to the traditional definition of a recession. And if you see the chart here, there's a second negative that has come in. So it's a good thing that Fed didn't go for 100 basis point. Now let us look at the current release. And it says GDP decreased at an annual rate of 0.9% in the second quarter of 2022, according to the advanced estimate released by the Bureau of Economic Analysis. In the first quarter, real GDP decreased 1.6%. The GDP estimate released today is based on source data that are incomplete or subject to further revision by the source agency. And therefore, we may have a subsequent refinement of this number. 0.9% decrease could change to something better or something worse. So we have to keep that in mind. Now, let's quickly start off by looking at the futures to see how the market is reacting to this news. So if I look at the Nasdaq futures, it's down minus 0.69 to minus 0.7%. And it seems that Nasdaq is looking bearish when it comes to the futures, but we are still on a bull trajectory. So I don't see a problem out there, except for the fact that the momentum is falling a little bit. Let's go and have a look at the indicators, and let's look at US oil. US oil is continuing its march upward. As I mentioned yesterday, we might potentially bounce back from this diagonal red line and then try to test the support again at 95.08, because we already seen demand destruction, and the GDP numbers are saying that the second quarter is again negative. Of course, it's not as negative it was in the first quarter, but still we are in a recession, probably a mild recession, and therefore I'm expecting US oil to moderate a little bit and come down again. So we'll see how it closes when we do our end of day live stream. If you look at QQQ is steadily improving. I have seen QQQ gain from the losses that it was in. It was earlier down somewhere around minus 0.7 when I started recording this particular segment. Now it is down to minus 0.33. So it seems that the market already expected that the recession figures will come in, and the GDP numbers are likely to be negative. And it's not as negative as they would have thought, in my opinion. And therefore, the market is going to look at this as a bullish sign that there is still strength in the economy. So with that said, if I look at the chart here, it's looking healthy. We are still on a bull channel. We have not yet tested the bull channel, and there's a lot of supports before we can come to that. S&P 500 also has improved. It's just negative minus 0.19. Russell's is already positive 0.07. Dow Jones Industrial Average is negative minus 0.17. And if we look at the VIX has come down from yesterday. This is today's candle. It is below yesterday's closing level, and it is going to test our support, which is at 22.73. I would be glad if it could break down below that. That will be in line with the improvement in the indices. Let us quickly look at QQQ again and see where it is. QQQ is struggling a little bit, but it has definitely improved from where it was before the GDP numbers were released. Then I would like to go to XLY by XLP. Yesterday was totally risk on. So today also, I think we'll be able to see a little bit of risk on action. With regard to US dollar index has fallen, and there's a doji candle here. There is indecision, and that will get resolved when the market opens, and we will see whether a US dollar index continues to go up. When I look at the supporting factors out here, MACD is bearish and momentum is also below average and flat. So it indicates to me that we are not going to see much gains in the US dollar index, and that will be positive for the stock market. So with that said, I'm just going to have a quick look at genomics and see where they are pre-market, just sorting it out to have the winners from yesterday at the top. Teladoc is negative pre-market, significantly negative, minus 22.53. So let us look at the news, if any. It says Teladoc Health loss widens on impairment charge while revenue jumps. This is the reaction to the news from yesterday. DNA, it's down minus 0.76. Beam is down minus 4.14%. PSEB is up 0.45%. So I think Jesse is going to find this helpful. Invitae down minus 3.43%. Caribou Biosciences up 4.43%. Illumina, no trades pre-market. ArcG minus 1.67 pre-market. Editas minus 1.31 pre-market. Verve minus 2.40 pre-market. Intelia minus 0.43% pre-market. If you haven't seen my earnings estimates for Intelia, please check it out. It's already published in the channel. Allogene up 1.43% pre-market. SQZ flat pre-market. CRSP down minus 0.30% pre-market. IDNA no trades pre-market. Bluebird down minus 1.10% pre-market. Regeneron no trades pre-market. IMTX no trades pre-market. Novartis down minus 0.16 pre-market. Vertex no trades, and Pfizer down minus 0.38% pre-market. So I think the overall pre-market disposition for genomics is negative today. But if the overall market picks up, I think that should change for genomics. But I'm really concerned about Teladoc losing 22% pre-market. So this is yesterday's news, which is actually driving it down. So the earnings have not been received properly. And this is a big setback for the ArcG fund as well. So it would definitely reflect in ArcG. Let me see where ArcG is. Here we have, it's down minus 1.67. It may go down further for ArcG. So with that, I would like to bring this video to an end. It's been a tricky video today, my friends. I think I would still be able to give it to you before 9:30 a.m. So that's a success in my book. So if you have not yet subscribed, please subscribe and help us grow this channel. And don't forget to put a like out there if you like this video. I would like to remind you that at 3:30 p.m. we have our live stream where we'll be looking at the market close, and also we'll be doing a technical analysis on the indices and the genomics watch list that we have, with an idea of looking at what's going to happen next day. So with that said, I'd like to bring this video to an end. Bye for now. See you at 3:30 p.m.